To be specific, today we're going to look at price action. I know maybe if you are a beginner or you are looking maybe to defend your skill, this price action or what the topic that we're going to cover today is actually one of the methods in which forex traders usually analyze the forex market. Now, before even we look at that, before even we look at this topic for today about the price action, let us first of all explore what forex is for maybe for those people that are in the forex market. Forex, first of all, is the buying and selling of currencies in a foreign exchange market, whereby the forex market is decentralized, meaning there is no centralized point of exchange, and as a result, currencies or trades are conducted over the counter with minimal interactions, okay, with minimal disruption associated with trading. Now, before even we continue, there are some things that I really, before even we look at for today's session, because I'm sure you have so many questions in regards to the price action, and we'll be exploring some of the strategies, why price action is important, why you as a trader should consider analyzing the forex market without any use of indicators. So, one thing about the forex market is that we have wide range of participants, and some of the participants in the forex market include the banks. We have like the banks such as the commercial banks, the central banks. We have companies, we have corporations, and we have small scale retailers like us. All those are the different participants in the forex market. And for these participants, like in the forex market is the largest financial market in the world, and trillions of dollars are traded each and every day in the forex market. Now, that presents a very good opportunity for me and you to be able to at least to be able to participate in the forex market and make an unwritten policy such as GBP GBP JPY, GBP out, GBP CAD. Those currencies will be affected. Now the other way in forex traders usually analyze the forex market is what we call technical analysis. Now, for the technical analysis is what we call study of the chart, whereby for traders that analyze the market using technical analysis, they can employ a wide range of trading strategies such as they can employ maybe support, resistance, candlesticks, chart patterns, or they can also use indicators or any other strategies, okay? Now, the last way in which forex traders usually analyze the forex market is what we call sentimental analysis. Now, for the sentimental analysis, this one is what we call looking at the market sentiments, whereby for traders that analyze the market using sentimental analysis, they can go and look at general market sentiments, what people are actually seeing, and then they can go to make informed decisions on whether to take, on where they can be able to make informed decisions to take their trades. Now for traders that analyze the market using sentimental analysis, they can employ nowadays with the social media, they can use the social media such as Twitter and Reddit. Also, they can look at commitment of traders. That's one of the reports that we usually use, that traders can be able to know the bearish of the market. Okay. Now, the most common way of analyzing the forex market is using fundamental and technical analysis. Okay. Now, these are the most common ways in which forex traders usually analyze the forex market. Most of the strategies you find them that they are falling in this technical analysis. This technical analysis is how most of the forex traders usually analyze the forex market. Okay. Now, for today, we are not going to say that much for my desktop. Now, for today, this topic for today is what we call the price action. And when we talk about price action, it's basically a focus on technical analysis. Okay. Now, before even we look at the price action, we have three types of chart in the forex market. There's something I wanted us first of all to note, so that it will be easier for us to understand this technical analysis way easily. Okay. Now, we can go to view prices in the forex market in three ways. Okay. We can go to view prices of different currencies either through bar chart. We can go to view prices through candlestick chart. And we can go to view prices via line chart. Okay. Now, these are the types of charts in the forex market. Okay. Since today we are focusing on the price action, we are going to focus on the charts. Okay. But in particular, we are going to focus most probably on the candlestick. A bar chart, it takes account into the opening and the closing of that candlestick. Okay, for the range chart, for the candlestick part, this candlestick chart is a visual representation of what is happening in the market. Like when you look here at the background, this one now is what we call the candlestick chart. Okay, for the bar chart, this is what we call the bar chart. Is also another way of doing the forex market. Here, this is what we call the bar chart. But as you can see, when it comes to bar chart, we cannot be able to deliver a lot of information. See now, likewise now, if you are to add the range chart, this is now what we call the range chart. Likewise now, if you are to add like the range chart here and you want to analyze the forex market, we cannot be able to derive a lot of information. You know, so that's why we usually focus on the candlestick as the most common way of viewing prices. Because for the candlestick, we can be able to derive a lot of information when it comes to trading the forex market. Okay. Now, for today, we can now kickstart our our session for today and look at what exactly, when you hear somebody say that is a price action trader, or when you hear somebody say that anatumia price action kuanalyze the forex market, what does that person usually means? Now what exactly is price action? Price action basically is a method of analyzing the price action basically is a method of trading whereby for traders that are analyzing market using the price action, they take into account they should take into account or sorry, let me take some water. Now, for the price action is a method of trading, and for traders that are analyzing market using price action, they take into account analyzing the forex market using those differences that I've shown you without adding the indicators. Okay. Now, for traders that are analyzing market using using the price action, we are basically analyzing the market. They are looking at this naked chart. Okay, you see like these candlestick, the types of charts that I've talked about, the line chart, the candlestick part, the candlestick chart, and the bar chart. They are basically looking at those particular charts, and then now they can go to predict the future price direction. Okay. Now, for traders that are analyzing the market using price action, in any way they are not going to use indicators. Okay. So for that person that is new and doesn't know about the price action, this one is a method of analyzing the forex market without necessarily using indicators. Okay. Now indicators, for those people that maybe are very new in the forex market, indicators, these are tools that help us analyze the forex market by providing us with trading signals. Okay. Now for traders that are analyzing the market using indicators, they can use sorts of indicators such as the moving average, the Bollinger Bands, they can use the MACD, they can use the relative strength index, among other indicators to analyze the forex market. Okay. Now for today, we are going to focus on price action. Now for price action, we have said for the price action, we are not in any way going to use indicators. Okay. I'm going to show you step-by-step guide on how you can go to analyze the forex market without using the indicators. Okay. Now before even we look at the indicators, or before even we dive further into the price action, let us look at some of the reasons why price action is very important for you as a trader. Some of the reasons why I would really encourage you to discard using the indicators and use different approaches or different strategies to analyze the forex market without necessarily using the indicators. Okay. Now, one of the reasons why price action is very important for you as a trader is because for the price action, it allows you as a trader to make real-time trading decision without necessarily relying on indicators. Okay. For you as a trader, you'll be basically focusing on this chart. Okay. And then now based on this forex chart, you can go to make different trading decisions. Using this forex chart here, you can go to know whether to take a buy trade or whether to take a sell trade. Okay. Another reason why price action is very important is because for the price action, it usually reflects the psychology of the market, and you can go to view the psychology of the market through the buyers and the sellers. We say that in the forex market, we have different participants. We have we have the commercial banks, we have the central banks, we have the companies, we have corporations, and all these participants, also you have small scale retailers, all these participants Also, all these participants, when they come to trading, they usually buy or sell currencies in a particular price level. Okay. Now, when you say that price action helps us to price action reflect the psychology of the market participant, is because the forex market, first of all, is very repetitive. Okay. What I mean is that the forex market usually gives us some footprints, and those footprints, they can give us, we can take advantage of them, because if we know that if this particular chart, if the market usually reacts this way, sorry, the forex market usually reverse some footprints, and those footprints are usually very repetitive. Okay. Now, for us as traders, if we know that the market usually each and every time the market does this, or usually each and every time the market gives us this particular pattern, this is what will happen. You see, as a trader, you can go to take advantage of that, because we are looking at those repetitive patterns in the market, and we are trying to take advantage of those price movement. Okay. Now we are seeing that price action reflects the psychology of the traders. This is because traders usually take advantage of those repetitive patterns, as well as they usually take advantage of repetitive patterns. It can be repetitive patterns, it can be major levels, also it can be areas of interest for us as traders. Okay. Now, another reason why price action. Now, the first thing I say that for the price action, it helps us to make real-time trading decision. Secondly, price action reflects the psychology of the traders, because you can go to know the repetitive patterns that occurs in the market, and then you can go to take advantage of that. Another reason why price action is important, because when analyzing the market using price action, you are basically eliminating the lagging that is associated with indicators. Now, indicators, tumesema, they are tools that help us analyze the forex market by providing us with trading signals. But one thing we realize about the indicators is that most of the indicators are usually lagging. What do I mean by the word lagging? That indicators are usually lagging. What I mean when I say that indicators are usually lagging is that by the time these indicators are providing you with that trading signal, that signal either to take a buy trade or to take a sell trade, price will have significantly moved against you. Okay? Hiyo ni kumaanisha, assuming nilikuwa nimefanya analysis and the price was at price 20. If I'm using indicator, if maybe I was to take an analysis, maybe nilikuwa nataka kuchukua trade at price 50. By the time maybe that indicator is showing me is generating for me that price signal to take maybe that buy trade, price would have moved to maybe at price of that. Okay. Now, if I can show you, or if I can go to direct you in a way, if I can go to direct you about another method of analyzing the forex market without usually relying on the indicators, you see, I have given you an edge that you require so that you can go to make money in the forex market. Okay. Now, another reason why this price action is usually important is that for the price action, you can apply price action across all time frame and across all currency pairs. Okay, because we analyze the market using looking at those particular charts. Okay, you can go to analyze the forex market using those charts across all time frames. Whether you are a scalper, whether you are a day trader, whether you are a swing trader or you are a position trader, you can go to analyze the forex market using. You can able to analyze the market using price action across all time frames as well as across all currency pairs. So when you learn about price action, it has no limit on the currencies that you can go to trade. Okay. Now, another reason why price action is very important for you as a trader is that for the price action, it is very good, or for the price action, it is great for trend following. Now, the price action is very good for, or it is very great for trend following as well as counter trade. Counter trend trading. Okay. Now, the reason why price action is very important is because you can go to trade it when the market is trending. Okay. Basically, when the market is trending, basically it means that the market is either bullish or bearish. Okay. Also, in addition to that, when you're using the price action, you can go to trade using counter trend trading. Okay, that means that the market imekuwa like bullish hivi. If the market has been bullish, now for the counter trend traders, they are basically, since the market is bullish, for them they're taking advantage each and every time the market is having this small retracement. That's why now for the traders that are using market using the using price action, they can make money in both ways. They can make money when the market is bullish. Also, when the market is having these small retracements, if the market is bullish, they can go to take advantage of that. Okay. Now, do we have any question in regards? Let me check if we have any question in regards to the price action. Mercy, do we have any question? I'm being informed that we don't have any question. Kindly, if you have any question in regards to the forex market, also if you have any question in regards to the price action, kindly comment up or comment any questions so that I'll be able to tackle all the questions that you guys will have asked, or any burning question that you have in regards to the forex market, or any question you have about price action. Kindly ask there so that we can be able to I can be able to answer all the questions. Okay. Now we are continuing with our journey towards understanding this method of trading called the price action. Now let us look at some of the key elements of price action. Let us look at the key elements. Of price action, which are some of the critical aspects associated with price action. Some of the critical aspects associated with price action. Okay. One of the critical aspects that is associated with price action is that when you're trading the market using price action, you don't need any indicator. So no indicator needed. Okay. So anytime you're analyzing the market using price action, you don't use any indicators. So you'll be looking at those naked charts, and then now you can be able to make better trading decision. Okay. Another key aspect, another critical aspect of the price action is we are going to learn about candlestick patterns. Now the knowledge about candlestick pattern is very much important. Okay. Now for the candlestick, I said candlestick is a visual representation of what is happening in the forex market. And for each and every candlestick we see here, like if I'm using like these candlesticks here, let me just show you here. If I'm using this one is a candlestick. Each and every candlestick we see here, it shows us how price has changed within the special period of time. So that means that if I'm using like the 1 hour time frame, that one candlestick means that it has taken 1 hour to form. And it is showing me how price has changed between that period of 1 hour. Basically, using the candlestick, I can go to know the point where the market opened at that particular 1 hour, the highest price it achieved, the lowest price it achieved, as well as where it finally closed. Okay. Now another reason why another key element about another critical aspect of price action is that as a trader you also need to know the context of the market sentiment. Now for you to be able to employ this method of trading about price action, first of all, you are saying that you won't be needing any indicators. Secondly, you are saying that you will require that small knowledge about the candlesticks. Secondly, you also need to understand the context of the market sentiment. When I talk about the context of the market sentiment, basically, you're supposed to understand whether the market is bullish, bearish, or ranging market. Okay. Now, this context basically is the different ways in which the forex market moves. One thing is when you talk about this context of the market sentiment, it's basically when you talk about this context, it's about basically understanding or looking at the forex market and understanding is the price direction upward, downward, or ranging, because price can only move in 3 ways. The price can either move upward, downward, or it can also be ranging. Okay. Now, for you to be able to understand the price action, first of all, you don't need to use indicators. You don't need to have you need the knowledge about candlesticks, as well as you also need to know the context of the market sentiment. Basically, by looking at those forex charts, are you able to know whether the market is bullish, bearish, or trading. Okay. Lastly, you also need to note about, for you to be able to understand much about the price action, you also need to know about market volatility. When I talk about market volatility, basically, this volatility of the market, the volatility of the market is first of all measured by the size of the candlesticks, because the size of the candlestick can give us the momentum. If that candlestick is big, it is showing us that there is high momentum, If the candlestick is very small, it is showing us that there is low momentum in the market, So when we talk about this volatility, basically, it's also about timing. When is the best time to trade? Okay, when is the best time to trade when it comes to analyzing the forex market? Okay. Now, since you have already noted about some of the key elements about the price action, we can look at the essentials of price action. Essentials of price action. When I talk about essentials of price action, basically, what are you as a trader supposed first of all to be able to know, so that you can be able to master the price action. When I talk about this essentials of price action, basically is what are you as a trader? What are you as a trader? Or what are some of the topics that you as a trader you're supposed to understand, so that you can go to analyze the market using price action. Okay, one of the key topics that you as a trader you're supposed to master, or one of the key topics that you're supposed to master, is what we call support and resistance. For you to be able to master the price action, you also need to have knowledge about support and resistance. For those people that are very new in trading, we have been covering about the support and resistance, but let me help you with a quick refresh about what it covers. We say support and resistance are levels whereby we would anticipate market to reverse. Are price levels whereby market has difficulty turning. The market has difficulty. Support and resistance are areas whereby we have major turning points in the market. When we talk about support, this support, we say that for the support is a price level whereby a downtrend might cause and reverse. Support, I say that support is a price level whereby a downtrend might pose and reverse. On the other hand, resistance is a price level whereby an uptrend might pose and reverse. Now, since we are saying that the market moves in three ways, in a bullish market, these are areas of support and these are areas of resistance. Okay. In a bearish market, these are areas of resistance and these are our areas of support. Okay. And then now in a ranging market, these are our areas of, this one is an area of support and this one is an area of resistance. So for you to be able to understand and master price action perfectly, you first of all need to understand about support and resistance. Support and resistance, those are areas where you have major turning points in the market. Like when you look at this Forex chart, are you able to identify areas whereby we have major turning points in the market? Okay. Now another thing for you as a trader, you need another key topic for you as a trader you need to understand, so that you can go to master the forex market well, is trend lines. Now trend lines, basically these are diagonal lines that are drawn and they give us future price direction. Okay. When you talk about trend lines, basically trend lines are trend lines are levels that are drawn when the market is trending. Okay, this is the word trending comes to the word trending market, means that the market is either bullish or bearish. So when you talk about trending, there are diagonal lines that basically highlight key levels associated when the market is either bullish or bearish. Like if the market is bullish like this, a trend line is a line that is a diagonal line that is indicating, that is highlighting these particular levels. Okay, if the market is bearish like this, a trend line is a level that is highlighting these particular levels here. Okay. Now, for you to be able to understand about the price action, first of all, you also need to understand about areas of support, areas of resistance. You also need to understand about the trend line. Thirdly, Another key topic that you need to understand when you talk about the price action, you also need to have knowledge about candlestick patterns. Now, when you talk about price action, you say that it's basically analyzing the market. It's basically analyzing the forex market without using indicators. So for you as a trader, first of all, you need to understand about support and resistance. You also need to understand how to draw those trend lines. If you are new in trading and maybe you don't know how to analyze the market using support, resistance, or also the trend line, kindly keep on coming each and every Friday, because we have covered all these topics, but we'll also be refreshing them. We'll be recovering them again. Basically, we'll be tackling them again so that you can always have that good knowledge. Now we are talking about essentials of price action. The other key essential, the other critical aspect of trading that requires price action is the candlestick patterns. When you talk about the candlestick pattern, you say that candlestick is a visual representation of what is happening in the market. There are some candlesticks, once you see them, they show you bullish reversal. Okay. There are some candlesticks, once you see them, they show you bearish reversal. Also, there are some candlesticks, once you see them, they show you indecision in the market. Now, for candlesticks that usually show you bullish reversal, some of them is, we have like bullish engulfing. We also have bullish pin bar, or what we call the hammer. We also have a candlestick such as the morning star. Okay. Also, for candlestick, so we are talking about the candlestick that shows bullish reversal. For candlesticks that show us bearish reversal, some of the candlesticks that usually show us bearish reversal, we have like bearish pin bar, we have bearish engulfing, we also have bearish harami, and some of the candlesticks that usually show us bearish reversal. Also, there are some candlesticks that usually show us indecision in the market. For the indecision, one of the candlesticks that usually show us indecision in the market, we have the doji candlestick. Also, we have the spinning toes. Okay. Now, for you to be able to understand the forex market, for you to be able to understand the price action, first of all, look at support and resistance. Have that knowledge about analyzing the market using support and resistance. Also have the knowledge about trend lines, as well as have a perfect knowledge about the candlesticks. Because one thing you realize is that all these ways, they're usually intertwined. Because you can, using support resistance and trend line, you are basically be looking at levels whereby the market is likely to reverse. And then now the knowledge of the candlesticks will help you to have very good entries. That's why I've showed you about the candlestick that shows bullish reversal, candlestick that shows bearish reversal, as well as candlestick that shows indecision in the market. Kindly note that for candlesticks that will show you indecision in the market, you are not supposed to jump in to take any trades. So anytime maybe you had identified a very key level, okay, and you see like a candlestick such as the doji or the spinning top, that is not the best time to go and trade, because it will show you indecision in the market. Okay. Now let us look at let me first of all look at some of the questions that you guys have asked.
Kuna Benji ameuliza, is price action part of inverse delta?
Not really. So Carlos is asking, which strategy is the best to analyze the forex market? Now, there is nothing like the best strategy. It's all about when it comes to trading, it's all about identifying one or two strategies that resonates with you and then focusing on them. The reason why I usually tell people that trading, there is nothing like a perfect strategy. There is nothing like the best strategy to analyze, because you need to identify one strategy that is resonating with you. Like here in the office, tuko 8 seats up. If I was to bring forex traders up, even if there's 8 forex traders up, niwaambiwa analyze the forex market, all of them will analyze the forex market differently, using different strategies that they understand the most. And then surprisingly, all of us, when you take those trades, all of us will be profitable. So, the essence is because the logic behind this is because for you as a trader, you need to identify one strategy that is resonating with you and then focus on it. There are some strategy, strategy, and maybe that strategy doesn't resonate with you. Also, a friend of yours can come and teach you another strategy that when you look at it, it is resonating with you. Because also you should not also note that when it comes to analyzing the forex market, when it comes to these trading strategies, these trading strategies usually go hand in hand with people's personality as well as time schedules. Like we have 4 types of trading strategies: to scalping, to day trading, to swing trading, to position trading. Okay, all these trading strategies, they usually go hand in hand with people's personality as well as a time schedule. Like for people that are less patient, most of the time scalping strategies are the strategies that are resonating with them. And people that are very patient, you find that swing trading and position trading are strategies that are resonating with them. So that's why I was telling you there's nothing like a perfect strategy. It's all about identifying one strategy that is resonating with you, 1 or 2 strategies that is resonating with you, and then focus on it. Okay. So let me look at some other questions. I hope I'll be able to answer all of them.
Queen anauliza, is price action same as BTMM strategy?
BTMM strategy is part of the strategies that we are saying. Price action basically is analyzing the market without using indicators. So here BTMM, since we are not going to use, to my best of my knowledge, BTMM, we are not using the indicators, so that one is part of price action. Any strategy that does not include indicator is what we call price action. Do you have any other question?
Yes. Does the strategy involve fundamental and analytical?
Yeah. Price action, basically, we can use actually for traders that analyze the market using the fundamentals. First of all, they look at the economic data so that they can go to know the price direction. Also, they can use also price action. Price action basically is looking at the chart and then looking at those historical data, and then now they can go to know even when this needs to be released, this will be the direction. Yeah. So for traders that are analyzing the market using price action, they should take into account trading the news. Also, they complement each other. Price action and the fundamentals, they usually complement each other. Yeah. They go hand in hand.
Okay. Queen anasema, teach us about liquidity and imbalance.
Liquidity is all about ICT. So that one you can cover another day since you cannot be able to start. Lastly, white cake anauliza, when a candlestick is bullish reverse, what does it mean and vice versa? Now, for bullish reversal candlesticks, for the bullish reverse, let me just answer that question. I've talked about the bullish reversal candlesticks. When I talk about the bullish reversal candlesticks, basically these are candlesticks. Once you see them, they will indicate either reversal or continuation of the trend. Now for the bullish reversal candlesticks, these are candlesticks. For the bullish reversal, candlestick, these are candlesticks. First of all, they usually occur in a downtrend. That means that we need to see a situation whereby we have successive bearish candle, and the market has been bearish for quite some time. Okay. Now, the moment now we see a bullish reversal candlestick, such as the bullish engulfing, bullish pin bar, the morning star, the bullish arami, it will signal reversal. So that's why you're saying for a bullish reversal candlestick pattern, it's a candlestick that usually shows reversal. Basically, when I say that bullish reversal, that means that the market was already in a downtrend, but the moment you see that candlestick pattern, and then now you combine it with another key level, such as an area of support or resistance, it will act as your confirmation that the market, since it was in a downtrend, it will reverse and go in an uptrend. Okay. Now, for a bearish reversal candlestick pattern, it usually occur for the bearish reversal candlestick pattern. They usually occur in a downtrend. That means that we want to see a situation whereby we have successive bullish candlesticks. And now once you spot these candlesticks, such as like the bearish engulfing, bearish pin bar, the bearish arami, they will act as your confirmation that that bullish movement, if the market was already bullish, and then now maybe we find something like bearish engulfing, assuming now this one bearish engulfing. The moment you see like this type of candlestick pattern, this one, now it will show you that this reversal, this one now it will show you bearish reversal. Basically, it is showing you that this bullish trend has finally changed from a bullish trend to a bearish trend. So that's why I was saying, if you want to master price action, first of all, you need to have knowledge about support and resistance, trend lines, as well as you need to understand about the candlestick pattern. Okay. Now, as we continue, we can look at advanced price action concepts. Now, we can look at, we have looked at the essential. Essential basically, topics zenye unafaa kuelewa about price action. The basic one ni support, resistance, trend lines na pia candlesticks. You know, now when you talk about advanced price action, basically, when you talk about advanced price action, it's basically trading the breakouts. Okay. Now, advanced price action, basically, for the advanced price action concepts, one of the things that for you as a trader you need to understand is what's a true breakout. When you talk about true breakout, basically, it's basically when the price goes through an area of support or an area of resistance, and then it breaks that area that is significant momentum. Okay. Now, one thing you should note about support and resistance is that just because maybe the market is in an area of support, assuming that we have the market was ranging like this, and then now we had an area of resistance, and then we had an area of support. Just because the market is in an area of support, it is not always guaranteed that the market will reverse. You know, now it's not always guaranteed that the market will reverse. You know, when the market breaks this area of support, when I talk about breaking out, when I talk about like a true breakout, it's basically when the market breaks this area of support or an area of resistance that you had identified, and then it breaks with a very good bullish or bearish candlestick that is showing you that momentum. Okay. Now, for this advanced price action, it's all about understanding what's a true breakout. Also, it's also understanding about what is a false breakout. Now, when you talk about false breakout, basically, price basically breaks an area of support or resistance, and it quickly reverses, trapping those who entered early. You know, like if the market has broken this area, and maybe I thought that the market has finally broken this area, and I'm anticipating for it to continue going down. Each and every time the market breaks this area, and then it quickly comes backward. Now, this one is what we call a fake breakout. Okay. Also, when we talk about like advanced price action, basically, it's also understanding about trend reversals. Now, for you to be able to understand the forex market, when it comes to forex market, you also need to understand about trend reversal. Trend reversal basically is how do you know that bullish trend or that bearish trend has finally reversed. You know, for traders that are trading, maybe because there are some traders that usually trade trend reversals, for them they can use chart patterns such as the head and shoulder, inverted head and shoulder, or they can use the double top or the double bottom as their confirmation that the trend has finally reversed. Okay. Now let us look at hii yote yenye tumekuwa tukisoma, tumekuwa tukiangalia about price actions. You know, basically what is price action, why it is important, what are some of the key topics that you need to understand. You know, tumesema key topics ni for you to be able to master price action, you should lazima ukuwe na knowledge about support, resistance, trend lines, chart patterns. Also, you can look at trend reversals as well as the breakouts. You know, now let us have a step-by-step approach to trading price action. Steps in which you can go to step-by-step approach to trading price action. Now, the first step. So, The first step, we are looking at steps to approach price action. Now, the first step as a trader, for you to be able to understand the price action as well as for you to be able to master price action, first of all, you need to identify market structure. When you talk about market structure, basically, market structure helps us to identify direction in the market. Like if the market is bullish, we need to identify a series of higher highs and higher lows. If the market is bearish, we need to identify series of lower lows and lower highs. Now, for you to be able to understand price action, first of all, the first step is identify the market structure. Is the market bullish? Is the market bearish? Or is the market ranging? Okay. Now, the other thing for you to be able to identify that price action, basically identify key levels. The next step is identify key levels in the market. Okay. Now, when you talk about key levels, basically these will be your areas of interest. Some of the areas of interest, something like support, areas of resistance, or areas of trending. So the first thing tumesema, and uangalia market structure, is the market bullish, bearish, or ranging. If the market is bullish, then it's advisable that you look for buy trades. If the market is bearish, it's advisable to look for sell trades. If the market is ranging, always look to take trades in an area of support or in an area of resistance. Now the next step tumesema, identify key levels. Those key levels, they can be either areas of support, areas of resistance, areas of trend, and also they can be whole numbers. Usually there are some traders that usually use the whole numbers as their key levels or areas of interest. Okay. Now the next thing, now you're supposed to look for price action signals. When you talk about price action signals, basically is, now maybe you have already identified whether the market is bullish or bearish. You have also identified an area of maybe a key level such as an area of support or resistance. Now looking for price action signals, basically what will act as your confirmation for taking that particular trade. Your entries are as important as your exits. Now this looking for price action signals, you can use something like the candlesticks. Candlestick can come in play here by this. Like if maybe you identified an area of the market was bullish, you had identified a key level as an area of support, and then now you have identified price action signals such as a candlestick. Candlestick kama tuseme bullish engulfing, that one can act as a very good confirmation. Also, a chart pattern such as the double top, inverted head and shoulder can act as your price action signal. Remember, you are using a forex market without using any indicator. Okay. Also, you can use additional confluence. When I talk about looking for additional confluence, basically, whenever you are trading, it's always important to have more than two reasons why you're taking a particular trade. Okay. So when I talk about having more than two reasons why you're taking a particular trade, you can use something like area of support level, trending level. You can use like the chart patterns. You can use like the chart patterns such as the double top, the double bottom. You can use something like in line with the trend as your confirmation. So that one thing about having additional confidence, having multiple reasons for taking a particular trade is because the probability of that trade going your way when you have more reasons is usually higher than when you have only one reason. So anytime you are taking a trade, always ensure that you have more than two reasons for taking a particular trade. Like kama tukapata na uniambia ni forex trader, kitu ya kwanza nitakuuliza, naona umechukua hii trade, mbona ukachukua hii trade? And as a trader, you should be able to defend by kuniambia I have this and this results. As long as those results are two or more, the probability of that trade going your way is usually higher. Now the other key approach that you need to understand when it comes to trading this transaction is that you also need to execute with risk management. Okay, trade with risk management. Anytime you want to trade in the forex market, it's always important that you trade in you take into account risk management. Basically, when you talk about risk management, it's basically the different techniques and strategies you should use to protect your capital. Over time we have been treating, we have, like last week we had a topic about risk management, and we covered about some of the techniques and strategies that you can use to protect your capital. We said like putting stop loss, putting the right position size, using risk to reward ratios. Like for most of the price that I'm saying that for the risk to reward ratio is usually 1:2. Lastly, now, okay. Now these are the simple steps that you can use as a trader to trade the forex market using price action. Basically, identify the market structure. Is the market bullish, bearish, or ranging? Secondly, identify a key level. A key level to measure is an area of support, an area of resistance, an area of trend line. Also, it can be like a psychological level, such as a whole number. Thirdly, now look for price action trading signals. Trading signal basically are your entries. Hapo kwa hiyo tukasema unatumia candlestick, you can use chart patterns. Lastly, pia tukasema look for additional confidence. Basically, trade when you have more than 2 reasons. Now the last thing is consider risk management. No strategy guarantees you 100% profitability, but with good risk management, you can be able to overcome market ups and downs. So with that small presentation, today was just but a small introduction. Next week we are going now to have daily life analysis using price action, using those strategies that we have been able to cover. Since each session is only 1 hour, today was just but a small introduction, and then now next week we dive further into price action. In addition to that, now I would like to encourage. Okay, let me first of all answer some of the questions that you guys have. 1 minute.
Kuna Brandon anauliza, does the market always obey the price action? You have tried it na derive rise and fall.
Yeah. The market usually respects price action very much. If you look at even at the historical data, you can even go and back test. Okay, as long as you are able to identify those levels results, and always tell people, always identify these key levels. Come up if you identify key levels, always start with higher time frame. Higher time frame gives you the bigger pictures. Secondly, entry criteria are very important. The reason why you're taking that particular trade. So the more you have entry criteria, the better it is for you. Always have very good meaning. Thirdly, always backtest before even you trade in your real account. It's always first of all to test it on a demo. First of all, end of backtest, then test it on the demo, and then now once you have the confidence and you have experience, you can go now to trade in the real account. Do you have any other question?
Yes. Which is the best time frame to identify the market direction?
So the best time frame to identify the direction of the day, I've said that always use higher time frames. Like I usually combine 3 time frames. Okay, if I'm using like the daily, I can use like the daily, the 4 hour, and the 1 hour for my entries. Okay, so higher time frame is usually like the best time frame to analyze the forex market, because using higher time frame, the market is usually stable on higher time frame. Secondly, the market respects those areas of those key levels in higher time frame than on lower time frames. Do you have any other question?